Welcome to Value Vest Daily. What if just two digital assets could completely flip the script on how money moves around the entire globe? In today's Deep Dive Explainer, we are digging into the powerful investment thesis behind USDC and Solana and unpacking why some analysts believe they could deliver a staggering 10 or even 100 times your return. Let's just paint a quick picture here. Imagine turning a $10,000 investment into $100,000, or maybe even a cool million. Now, I know, it sounds like pure fantasy, right? But it's the absolute core of the investment thesis we're breaking down today. A thesis built on just two assets that are sitting right at the heart of a massive financial revolution. So, today we're going to get into the nitty-gritty, the exact mechanism behind this huge disruption. We're going to see how Circle, the company behind USDC, is basically putting its stablecoin on the super fast rails provided by the Solana blockchain. We'll dig into the hard data, the explosive growth, and of course the powerful investment case that suggests this duo could be an absolute game changer for your portfolio. So here's our roadmap. First, we'll talk about this new financial revolution itself. Then, we'll look at exactly why the old system is just becoming obsolete. After that, we dive into the hard data, because the numbers don't lie. Then we'll tackle that big 10 to 100x question, give it a much-needed reality check, and wrap it all up with a final verdict. Let's get into it. Okay, Section 1, the new financial revolution. At the center of this perfect storm are two key players, USDC and Solana. And really, understanding each one on its own is the critical first step to getting why their combination is just so incredibly powerful. All right, so first up is USDC. Now, this isn't like other cryptocurrencies that are flying up and down in price. No, USDC is what we call a stablecoin, which means it's designed, well, for stability. It's issued by the company Circle. And here's the key. Every single USDC is pegged one-to-one with a real US dollar that's held in reserve. That reserve is mostly cash and super safe, short-term US government treasuries. This makes USDC a true digital dollar. It's perfect for actual transactions. And when we say backed by reserves, this is what we're talking about. The quality here is top-notch. 85% is sitting in ultra-safe US treasuries, with the other 15% in cash. This kind of transparency and full collateralization is exactly why the big institutions see USDC as the gold standard of stablecoins. It just builds an immense amount of trust. And now for the engine that makes this whole thing go. Solana. If you have this idea in your head that blockchains are slow and clunky and expensive, well, you need to throw that idea out the window. There's a reason people call Solana the Ferrari of Blockchains. It is built for one thing: pure, unadulterated performance. We're talking insane speed, global scale, and transaction fees that literally cost fractions of a penny. And look at this. The difference in performance here isn't just a little bit better, it's a quantum leap forward. Solana can handle around 65,000 transactions every single second. Now compare that to a financial giant like Visa, which clocks in around 1,700, or its main crypto competitor, Ethereum, which struggles to do just 20. This is the kind of performance you absolutely need for global scale adoption. All right, let's move on. We've seen the incredible tech, so now let's talk about the problem it's built to solve. Why exactly is old money, or what we call traditional finance, becoming obsolete? Well, it really just boils down to some very basic and honestly very frustrating inefficiencies that we've all had to deal with. Just think about this scenario for a second, something millions of people deal with every day. You need to send, say, $500 to your family overseas. You go through the traditional banking system, and you're immediately told it'll take 3 to 5 business days to get there. And for that privilege, you're going to pay anywhere from $30 to $50 in fees. It's slow, it's incredibly expensive, and it only works on a 9 to 5, Monday to Friday schedule. It's just outdated. And this chart just lays it out in black and white. It puts the entire disruption into stark relief. On the left, you've got the old way. On the right, the new way. USDC running on Solana. Let's look at speed. We go from days to mere seconds. How about cost? We go from tens of dollars to less than a single penny. And access? We go from those restrictive bank hours to a system that literally never sleeps, 24/7, 365. It's not just a little bit better, it's a complete paradigm shift. Now, this isn't some pie-in-the-sky theory about the future. This is happening right now, and at a staggering scale. So let's get into the hard data. Because the numbers, well, they really don't lie, and they tell a story of absolutely explosive growth and widespread adoption. Let's just start with a number that is honestly hard to even comprehend. $33 trillion. That was the value of stablecoin transactions in 2025. I mean, to put that in perspective, in some months, that volume was higher than Visa and MasterCard's combined. So this idea that it's some small niche market, that's completely out the window. This is a global financial system running on new rails. So where is a huge chunk of all this activity taking place? You guessed it, on Solana. The total value locked, or TVL, which is basically just a fancy way of saying the amount of assets secured in Solana's ecosystem, grew by over 1,000% in a single year, hitting $35 billion. That is a clear signal that users, and more importantly, capital, are just flooding into this ecosystem. They trust it to handle serious value. And hey, it's not just crypto people saying this stuff. McKinsey, one of the top consulting firms in the entire world, called stablecoins the HTTP of money. Think about that. Just like HTTP created the protocol for information to move on the web, stablecoins are creating the protocol for value to move. And they project this tech is on track to disrupt a $400 billion annual payments industry. That's huge. But the ultimate sign that something is real, the ultimate validation, is when the big institutions jump in. And we are not talking about small players here. Visa and JP Morgan are actively using USDC on Solana for payment settlements right now. Why? Because it's faster, it's cheaper, it's more efficient. You've got financial giants like BlackRock, PayPal, and Stripe all integrating this tech. We've seen Solana ETFs launch, pulling in billions from traditional investors. And maybe most importantly, new legislation is providing the regulatory clarity that gives these institutions the green light to go even bigger. Okay, so we've established the tech is just flat out superior, and the adoption is very, very real. So that brings us right to the core question, doesn't it? What does all this mean for us as investors? Let's analyze the potential upside and really tackle that massive 10x to 100x question. All right, let's break down the two assets involved. On the left, we've got CRCL, which is Circle stock. I mean, it's already had an incredible run, up 270% since its IPO, but analysts at big firms see it going to $280, maybe even $300 in the near term. Then on the right, you've got SOL, Solana's native token, currently trading around $85, but a lot of bull cases have targets north of $500. And, you can't just forget its history. It once posted a mind-melting gain of 17,000% in a single cycle. So what could this look like over the long haul? This table kind of maps out a few potential scenarios. So in a pretty conservative base case, you could still be looking at a 2 to 3x return on Circle stock and a 3 to 5x on SOL. Now, in a more optimistic bull case, where adoption just keeps roaring ahead, we could be looking at a potential 5x for CRCL and a massive 10 to 20x for SOL. And then there's the moonshot scenario. If this technology truly becomes the bedrock for the future of finance, a 10x on CRCL and a staggering 50 to 100x on SOL isn't completely out of the realm of possibility. Now, before anyone gets too carried away here, we have to pump the brakes and inject a serious dose of reality. The potential rewards are absolutely massive, but they do not come without significant risk. This next section is our necessary reality check, and it is absolutely crucial to understand the volatility and the headwinds that you could face. Let's just be crystal clear. This space is high risk. First, the market volatility is it's extreme. These assets can and do crash 50 to 80% in a bear market. Second, regulation is a total wild card. A negative political shift somewhere could create major problems. Third, the competition is fierce. Ethereum has a huge head start and other blockchains are fighting for a piece of this pie. And finally, remember that a company's stock doesn't always follow its growth. CRCL stock itself once dipped 80% even while its business fundamentals were getting better. This is not a safe investment by any stretch of the imagination. And that, of course, brings us to our mandatory disclaimer. None of what we've discussed today is financial or tax advice. This explainer is for educational purposes only. The goal here is to give you a framework, a way to understand this trend, but you must always do your own research and make decisions based on your own personal situation and risk tolerance. Okay, let's bring this all home in our final section. We've covered the tech, the data, the massive upside, and the very real risks. So, what's the final verdict? And more importantly, what does all of this actually mean for you as you think about the future of your own portfolio? And now I really want to turn this over to you. After seeing all the data, hearing the bull case and the bear case, do you think this 10x thesis is actually achievable? What's your gut feeling, your price prediction for Solana? Drop your biggest takeaway in the comments below. I genuinely read every single one, and I'm really curious to see what you all think. Here's the big takeaway. The combination of USDC and Solana really does represent a fundamental shift in how finance works. It's faster, it's cheaper, it's more accessible, and yeah, the risks are very real, but the data strongly suggest we are in the very early innings of a massive adoption wave. If this explainer helps you get your head around this complex topic, please do us a favor and subscribe, like, and share ValueVest daily. We put these out to give you learning opportunities before you put your hard-earned money to work. And hey, one more thing before you go. We absolutely love exploring these cutting-edge, high-risk, high-reward opportunities. So if there's another trend or a specific project that you want us to do a deep dive on, please let us know in the comments. We literally build our content calendar around what you, our community, want to learn about. Thanks so much for watching, and we'll see you in the next one.